right, next up on our list for consideration is Cashbuild. Remember, this is an operator principally targeting cash-paying customers rather than the high-end types that go to Builder's Warehouse to buy a fancy electric device. It's got 215, actually I think it's slightly more stores now, 225, 230 or thereabouts, principally in South Africa, but also spread around the rest of the SADC region. Market cap 7.3 billion rand. You'll see in a minute how well it's done recently after a fairly quiet patch a couple of years ago. Price earnings ratio 21.7, dividend yield 2.16. So, Joseph, the business model here, which Cashbuild evolved and developed, was to have smaller lines, in other words, not an absolute plethora of stock, but to really focus on trying to drive price competitiveness in cement, window frames, basic IBR sheeting. So really going after the market where people are doing basic home extensions rather than fancy Italian, you know, sort of taps and all the likes, like we were discussing earlier. But it's a strategy which has worked well for them, and I know they've got great buying power in that space.
I agree here. I think individual home building, as I said, you know, is possibly sustainable, is gonna remain elevated purely because of migration. You know, people moving through, and secondly, businesses are also under pressure to provide housing for their employees. If you look in terms of the mining sector, and secondly, you know, or lastly rather, you know, your informal settlements, what we call squatter camps. You know, government is also under pressure to make sure that they do basic housing for
which then turns these places into formal and permanent places of residence, which then means that people take whatever money they have and go to Cashbuild in order to start putting up some basic brick block structures and so on.
Yeah. So certainly I think the demand there is basically sustainable and is inelastic. So I believe that they are in a good space, I think, in the next few years.
Yeah. Management team, whoa, look at that. So there we go. That's what I was referring to earlier. I mean, they really just look like they went off the boil in 2013, 2014. That's when all the moaning was about. African Bank was blowing up. Everybody was carrying on and grumbling about how the middle-class consumers were done and dusted. Cashbuild roared back with strong numbers and has delivered good numbers again recently. So the new CEO, Werner de Jager, and his team really getting the market's credit. It's almost at 300 Rand a share. That's a hell of a share price improvement.
That's a trebling in terms of the share price within 18 or 12 months. So that's fantastic, I think, from a performance perspective. So certainly the market, I think, is giving it a thumbs up, and the momentum might carry on. Earlier on, we talked that consumers might be feeling a bit under pressure. The Reserve Bank is talking about increasing rates, but remember, these guys are cash sales. So really, there's nothing on credit, and housing is almost like food. It's one of those things which is a basic thing, and it's a priority.
Okay, so hot or not, I mean, after a performance like that, one must always worry a bit about price, but it doesn't seem too expensive, seems to be delivering the growth through the doors, through the stores. Hot or not?
The dividend yield is attractive. The PE certainly, kind of below Massmart, close to SPAR. So it's a tough call. I would still give it as a hot as well today.
I'm going to go with hot too. I like that.